Hey guys, how's it going? So I haven't done too much research into iAnthus, but I thought I'd make a video about it anyways because some guy on my YouTube channel is bugging me about it. I have a zero position in this, but iAnthus could have been the greatest investment ever, and I still think that there's a possibility that the stock price could keep going up to the upside. So if you went in and you bought iAnthus at 10 cents, or even below 10 cents, 8 cents, 10 cents, you would have made it off like a bandit, like literally a bandit, because the stock right now is valued at 38.5 cents. You would have 4x your money if you bought it at 10 cents and you sold out at 40 cents. But the thing is, I think it's going higher. I think the stock could recover back to $1 plus in the future. Because I think that iAnthus is a very attractive acquisition target, and I think that big companies will pay a decent premium to acquire iAnthus. I'm thinking about $400 or $500 million easily, but hey, that's my opinion, not financial advice. And on top of that, iAnthus is not extremely dilutive. It only has about 171.72 million shares. So $1 would equal to $171 million of value. $2 would be 300 million, about 300 million. $3 would have been 450 million. And iAnthus right now is 66 million. And so if iAnthus went back to $2 or $3, I wouldn't call that extremely overvalued. But will investors pump it up that high? This could be a possibility. I have like I said, I have a zero position in iAnthus right now. I may make one in the future, but at the moment, I have a zero position in iAnthus. And I think that it could continue to run up to the upside. It is kind of overbought right now with RSI at 84. But, and I feel like it won't drop back down to 10 cents. But I could be wrong. Anything's possible in the markets. We'll see what happens. Just recently, they came out with recent trading activities of iAnthus stock. They basically had to issue one because investors were buying up iAnthus stock and pushing the stock price up, and iRock was wondering what's going on, like why is your stock going up so much, and they issued out a press release to satisfy iRock. So yeah, you guys can read it for yourself. I'm not gonna read it, but yeah. So this is the reason why iAnthus stock popped to the upside. They had the biggest reason I think is their gross margins, which is 62.9%, up from 54.8%. A 62.9% gross margin is very good gross margin to have. Not a lot of companies in the industry has a 62.9% gross margin. They still came out with a net loss of 9.7 million, or a loss of 0.06 cents per share, versus a net loss of 20.9 million, or 0.12 cents per share in the prior quarter. And then the company also has liquidity issues, and they cannot the company did not make applicable interest payments due on its 13% senior secured convertible debentures and its 8% convertible unsecured debentures due on March 31st, 2020, June 30th, 2020, or September 30th, 2020. As previously disclosed, the non-payment of interest in March 2020 triggered an event of default with respect of these companies. Long-term debt consists of principal amount at face value of $97.5 million and $16 million of, so their debt is a big concern, but I still think that they're an attractive acquisition target for any companies wanting to enter the US. in my opinion. So that's the reason why I think the stock is also popping up. Well, they're popping up because they had decent gross margin, but overall, I still think that iAnthus is a really good acquisition target. Now let's just look at the SEDAR financials. So on the SEDAR, they only have about $10 million of cash, which is a little bit. Actually, they have $15 million of cash because there's also $5 million of restricted cash. They have a total assets of $404 million, but most of that, like almost half of that, is intangible assets, which is basically fluff at the moment. Their total liabilities is $301 million, which is current proportion of long-term debt, and another one for over here for another almost $14 million, more than $14 million of long-term debt. So half of their liabilities is debt, which is not good, but I don't think that really matters at the end of the day, in my opinion. Shareholder equity came out at $102 million, and the company's valued at $66 million. Their revenue was pretty decent, $40 million of revenue. Gross margin before biological assets, before fair value adjustments, is $25 million, which is really, really good. Their total expenses came out to be $32.98 million, but then you could take away impairment losses and depreciation and monetization and share-based compensation. They would actually have flipped the profit, surprisingly, because their expenses would be around $22 million, and then their gross profit is 25, which actually they're actually flipping a profit, which is kind of shocking. That's probably the biggest reason why iAnthus stock is getting pushed up right now, and I think it will continue to move to the upside. At least that's my opinion. Anyways, thanks for watching. I got another 30 seconds to last, but really good financials. I wish I had a position in this, but I don't. I may make a small position. It's kind of tough to make a position in iAnthus when the stock is ran so hot in the past few days. I wish I made one earlier, but it kind of flew under my radar, and then by the time I noticed it, the stock already ran so much that I was hoping for a pullback. It actually ran even further. It went all the way up to 65 cents, pulled back 50%, and I think Monday is probably going to head back to 50 cents. My opinion. We'll see if that happens. Anyways, thanks for watching, guys. I hope you enjoyed it. Subscribe for future updates, and have a great day. Bye.